And the CEO of JPMorgan Chase, Jamie Dimon, speaking with me in a Fox Business exclusive. The banking chief sounded off on the worker shortage, inflation, and the economic recovery. When you reported second quarter, I think $12 billion in earnings and $30 billion in revenue and the highest investment banking fees on record, we all thought we were roaring to go. You said, I think, the consumer is raring to go, you said. And then expectations changed. A lot of people said, well, we're at peak growth right now. You saw that volatility in the market. Has growth slowed, and do you have any visibility about the year ahead?
Yeah, no, it definitely has not slowed. I think people are overreacting to short-term numbers. Credit card and debit card spend, if I have my numbers right, are 20% higher than they were 2 years ago, pre-COVID. 20%. The economy is about as big as it was pre-COVID now. Jobs are completely plentiful. So a lot of the positive signs didn't change. People got a little worried about China, a little worried about Delta, a little worried about, this was less than they expected or something like that. But those economic data are all distorted a little bit because we've never come out of a global pandemic with supply lines, certain supply lines between certain countries hampered and things like that. But underlying that, you have a very strong consumer business. I think you have exuberance. Look, you're on the road. America's coming out of it. And so if you read American history, the innovation and growth of this country is extraordinary, and you've seen it today. I travel around, and I still can't believe the amount of venture capital companies and innovation, and it's not just digital, it's mRNA. Right. And that may cure cancer. So let's look at the bright side a little bit. We've been a little too pessimistic because of a few things hanging out there.
I love what's going on in healthcare, you know that, and especially the innovation in cancer. How are you doing?
Personally, I'm doing great, thank you.
Yeah. No, you had a major struggle a few years ago, and we were all worried.
Yeah. I'm mostly fully recovered. I am a beneficiary of this unbelievable system of ours and unbelievable doctors and surgeons and radiologists and stuff like that. So,
are you seeing anything in terms of what's been discussed before with employees? A lot of companies are saying we can't even fill the jobs that we have right now because we can't find the people to work. Do you see any of that?
Yes, probably for the first time in my life. I always fill out a survey for the Business Roundtable for 20 years. You have a hard time attracting talent. And it's always been no, 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 no. And this is the first time I'm going to say yes. And we see it in different places and different things, and they're all different reasons. People are trying to come up with a simplistic answer. We think roughly of the 8 million people who are not employed yet, who are employed, less employment, 2 million have probably retired, 2 million are probably waiting for school so they can go back to work, 2 million are looking for different jobs, and maybe 2 million is they are being paid more not to work, and that's probably true too. It's not the predominant reason. I know people are breathless over that too. It's very possible September, October, you can see the tide change. Jobs are plentiful. People take them back. They've already moved. People moved to different cities or said, I'm not going back to the old job. They'll start looking for the new ones. And so I'm a little optimistic that will sort itself out.
Is it partly policy because we're sending checks to people and they're feeling like, well, I have more money staying home?
A teeny part. We've looked at that left and right. Yes, it's a teeny part, and it's a bigger part for certain types of jobs.
What about inflation? We know that everything is costing more right now. A lot of things are costing more. Are you seeing inflation? Do you agree that it's temporary with what the Fed has said?
I don't. But I'm also looking ahead. I think you still have a lot of stimulus that hasn't been spent and a lot more stimulus coming. Having fiscal deficits that big is unprecedented, and that by itself almost has to be inflationary. It's fundamentally different than QE. And so I expect that'll drive a little bit. You see it in the wages now, and not all those people are going to go back to work. And so I think there's a portion which is temporary and a portion which is probably not. And now you got to look at the range of possible outcomes. Part of it is that inflation is higher in the fourth quarter, levels off in the first quarter next year, and then starts to come down, and it's not scary, and the 10-year bond rate goes to 3 or 3.5%, and that's fine. Life is okay. Obviously, if it's dramatically higher in the first quarter, second quarter next year, and then the Fed has to do something it hasn't done in a long time, which is jam their foot in those brakes, that's that kind of causes a little bit of a recession type of thing. So
now, when would you expect the 10-year to go to 3.5%?
It could happen. In my own view, look, no one knows the future. We don't run the company on what I'm about to say.
But it hit 1.1% yesterday.
Yes, because people are still overreacting to stimulus and Delta and all these other things. The governments are still buying a tremendous amount of bonds. The Fed said they're going to do it. The ECB said they're going to do it. The BOJ. Second they change, And I think you'll start to see those rates go up to a higher rate, and which, of course, is good for banks, but that's not why I want it. I think it's just normal. For growth, if you have growth at 3%, the 10-year bond should be at least 3%. And so I think normality is probably a good thing, and that, whether it happens by the end of the year or by 3 years from now, I just don't know. No one's ever seen this kind of fiscal and monetary stimulus. And so, we'll be writing books about this for 100 years.
Do you think the investment banking bonanza continues? Do you have any visibility on that in the next year?
Yeah.
Is that part of it, these low rates, that's causing this boom? What are you seeing there?
A little bit. First of all, we don't run the company like guessing about that kind of. We cover clients, we cover them through thick or thin, and we take care of them in good times and bad times. I look at some of the the economy as like the weather. So obviously it was an unbelievable banking, investment banking. M&A is still running high, people still raising debt. Equity, we have a tremendous amount of IPOs and the SPAC phenomenon, all that. It can't run at this level forever. So I expect it to kind of normalize over time. But right now, it still looks pretty good.
But the backlog looks good.
Right now. Remember, backlogs tend to open and close. So people talk about that like it's a given. It's not.
In your annual letter this year, you wrote about the competitive threat of Silicon Valley, and you mentioned Walmart. And I remember that this week when we saw that deal between Square and Afterpay. Talk about that a bit. How do you see things changing, and are you going to lose market share in terms of transactions? Yeah,
so I think in business you always try to do a full assessment. Like I try to give you one in China. So banks are becoming a smaller part of the economy. And that's kind of a global phenomenon for a whole bunch of different reasons, which I'll talk about in a second. Then we compete with shadow banks. Think of Citadel and mortgage brokers and direct lenders, and they're becoming bigger. I'm not calling it systemic. I'm just stating a fact. That's a fact. And then we have fintech, very successful companies. Square, PayPal, Stripe, tons of other ones, and 100 you don't know. And we invest in a lot of these companies. We partner with some of these companies and things like that. And they do some things much better. They can get rid of pain points and have legacy systems. They appeal to money. They do a whole bunch of good stuff. Then you have big tech. So think of Google, Apple, Amazon, Facebook, Walmart, and a bunch of other very large companies also have huge bases of customers, huge digital assets, huge platforms, and in some way or another get involved in banking. They may not do it directly, but they're trying to embed payments, or they're trying to have a marketplace for banks like Google is. Or, Apple's got the Apple Card now, and in my life, I've never seen that kind of thing taking place. And having said that, we have advantages and disadvantages. Some of our advantages are size of scale, and brand, and capability. We got some of the smartest people in the world, and we got wonderful team members, et cetera. But we also bear, and this is a fact, by the way, this is not like, I'm not making it up, capital requirements, liquidity requirements, social requirements like CRA, which I'm not against, AML, BSA requirements, which are much higher, sanction requirements, OFAC requirements, insurance requirements.
And they don't have any of that.
It's different, but they certainly don't have all of that. And we get paid half as much in Durbin as they do. So some of these neobanks, the only reason they're doing well is because they get $200 on a small account, and we get $100. And if that's what the government wants, so be it. But I think you have to have your eyes open. I'm comfortable with JPMorgan to be a competitor. Okay, we're going to win, so help me God. But acknowledge the facts. The other thing is there's no way with what I just said that everyone's going to be a winner. It's just not possible. So I think you're going to see a lot of people, both fintech, maybe some of the big tech, maybe some of the current banks aren't going to make it. And so that competition will take place. And remember, I'm not against competition. It may be good for the American public. So this is not a bad thing. It's just life.
Yeah, it's life, but you're not getting the same breaks that they are. Policy is different. The big banks have much stronger policy.
There's nothing I can do about it.
Yeah.
I accept it, and I don't expect it to change.
More of my exclusive interview with JPMorgan Chase CEO Jamie Dimon coming up later this hour. We will get his take on the future of remote work with growing concerns over that Delta variant and whether JPM could issue a vaccine mandate. All coming up.